beyond market headlines. To understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
And it's a start in the red, in line with what happened on Wall Street overnight.
American stock market is beginning to give up some of that outperformance.
Top Nifty resistance at the 20-day moving average, which is at about 22,801.
The Reliance Industries, if we can get past the 20-day MA, that'll be very, very good news for the Nifty.
Forecasting around 6% growth, 6.2% growth this financial year 25.
It's lower, as the pre-open, the GIFT Nifty, etc. were indicating, but not that much.
Provide enough indicators, confidence about our business that we are.
Sure.
But stay away from actual guidance.
The froth is out, so all the more reason to not worry.
And if it doesn't pop through 3%, I think they'll resist some kind of recession.
Labor doesn't have enough pricing power. Capital is in shortage. That is pretty much the constraint to GDP growth right now.
And India seems very positive.
Reliance Industries that is keeping the Nifty in the green as of now.
Well, that was the day so far. Hello and welcome to Closing Bell. We are coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Nigel. With me is Mangalam. We've got 60 minutes to go today, and then we get into the weekend, and all eyes are on, the boys, the men in blue. And hopefully when we come back, Mangalam, on Monday morning, we'll have the trophy. And we'll also have the markets that are pretty well and doing quite well.
Totally. We call this the CNBC-TV18 Motilal Oswal studio, but for all practical purposes, this is the Dubai International Stadium where all of us are cheering for Team India. Both Nigel and I, currently we have our green tea cups in our hand, but come Monday, we will have, hopefully, the Champions Trophy cups in our hand as well. The men in black, the New Zealand guys, would perhaps be on their flight back to New Zealand, and we'd be men in black on Monday. For now, we're men in blue. Men in black on Monday, we'll wear our suits, talk about the markets, but as of now, all hearts beat for Team India. You want to shout that? India!
India! Come on, India!
Let's
Come on,
do
India!
this.
Getting pumped up for it, Mangalam. So the men in black, you have the men in blue, and you have the markets in the green. So that's pretty good tidings for today. And Kamit the man, the big boy, Reliance Industries. That's put its hand up today. That's up 3.5%. And almost the entire 20-25 point gains that we're seeing is because the giant has chose to play that big innings today, up 3.5%. And from yesterday's low, I think it's up close to around 6% or thereabouts. So the special player comes in there and scores a special innings on a big day.
You speak about the special players, special innings. Just bring back the stadium and you will see something very interesting that is happening. Who's the heavyweight in the Indian cricket team? We have Virat Kohli, we have Rohit Sharma, both the men in the blue here. Yeah. And on top of that, Virat Kohli has raised his bat, and with his bat, what's higher is the sensex. Rohit Sharma has raised his bat. You have the Nifty as well. So you have a couple of these heavyweights doing extremely well for our frontline index. And then you have Reliance, Virat Kohli just standing with his bat up, and that's doing well for the market itself. What's not doing well are a couple of these mid caps. No real worries out there as well. The broader markets are in fine fettle. The Nifty Bank is something that we need to keep an eye out on, whether that comes out of its little funk that it is in on the way down. So if the IT pack and the Nifty Bank also does some bit of support for the frontline index, we have boom, boom.
Well, that's right, Mangalam. And our director tells us get back to the cricket in just a bit. For the time being, Mitesh is waiting by to tell us what's the trade. Hi, Mitesh. I'm sure you're excited about the game on Sunday. For the time being, though, tell us what's the trade. The markets have done pretty well, right? Global equities were in a bit of a tizzy. We had a dip for the first 15 minutes. And from there on, I think it's more or less been flattish to positive terrain. And the good news is a couple of these heavyweights now are putting their hand up and getting counted. Your view?
Yeah. So, good afternoon. My understanding is that, broadly, the market is biased positively. And therefore, I think, while you will have some, dose of volatility, the overall, the movement should be on the positive side. So keeping that kind of a view, the idea should be to trade with long bias and use declines to buy into. This is not a start of a new trend, but more of a kind of a counter trend rally And despite that, I think, my sense is that as long as we are not breaking 22,350 odd zone, I think we are pretty safe. And we've had about a rally of roughly around 600 points. So 150, 200 points kind of a pullback to the moving averages on the hourly to hourly charts can still happen, but that will not disturb the structure. As long as I said, we are not breaking 22,350, 370 zone, I think we're pretty fine. So trade with long bias. And on the upside, I've maintained that while there's mild supply at 22,600 levels, the eventual targets look like 22,750 to about 22,800, which is also a gap zone and also an area from when we were falling. The markets kind of made multiple support pivots and was bouncing back from there. So that should now act as a supply pivot. So therefore, I think that should be the target in the near term.
What about individual stocks, Mitesh? What are you backing this afternoon?
So on the stock side, I would say PI Industries is a buy with a stop at about 32.10 for targets of 33.60. And the other stock which I like is NMDC, which I would recommend buying with a stop at about 66 for targets of 71.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on a couple of names then. Zee Promoters, they have gone ahead and they bought closer on 27 lakh shares worth around 27 crores through the open market. That could explain why the stock is a little excited in today's trading session. The promoter's stake, well, it was only at around 3.99%. Post this purchase, it goes to around 4.28% or thereabouts. The street believes that the quantum is decent, and so it's clearly a positive indicator. Nuvama, they maintain their buy rating. They have a target price of around 185 rupees. They say that the stock is attractively priced because it trades at around 10 times PE. That compares with the one-year average of around 14 times. The key points that they highlight are the subscription revenues remain strong with 7 consecutive quarters of expansion, and they believe that this trend will continue for a couple of more quarters along with price hikes as well. On ad revenues, they acknowledge that currently it's been quite weak, but it should start recovering from the second quarter of next fiscal onwards, led by urban demand recovery as well as higher gross margin for the FMCG space. They also go on to say that the rural local advertisement spends, they have improved a little bit. And finally, they make that point that Zee had made in their past conference call that in quarter 4, Zee has said, quarter 4 FY25, they expect to make good strides on the margin front. And they're looking at margins moving to around 18 to around 20% margins in the next fiscal. That's in FY26. So that could be one of the factors where this big underperforming stock, you have the promoter entity coming in there, putting their weight behind it, going and, buying closer around 0.3% from the open market. The street likes it. Stock currently at the high point of the day. Prakash Diwan's with us. Hi, Prakash. Over the last few years, many times you have discussed this stock. I think at 300, at 200, at 150, at 100. The good news is the promoter now has bought at around 100. How much of confidence does it give you? And valuation-wise at 10 times, are you interested or not?
Good afternoon, Nigel. So I think, there could be multiple triggers or levers attached to this acquisition by the promoters. But by and large, it's in that zone where you probably have a favorable risk reward, given the fact that they sit on an amazing, rich content library, the kind of reach that they have. So there's not much to lose from here on. So it's more, my sense is it's probably a value buy from the promoter's perspective. But, Nigel, the market is such that you're spoiled for choice. You really don't have to follow what a promoter's interest is, very narrow in this case. And it could be for something which we really don't yet understand in the public domain. So I would not follow that as much. But yeah, it does tell you that there's enough value, as we can also sense from what could potentially be an upside. It's probably available at 1/3 of what people thought it should be, and that's exactly where the comfort is.
Prakash, there's some support coming in for the Nifty Bank. The Nifty Bank has cut its losses a little bit, and that's largely because of Kotak Mahindra Bank. So pull up the intraday chart of Kotak Mahindra Bank, you'd see an up move out there as well. So the Nifty Bank, as you see from the lows, it's moved higher, still down about 100 points, but Kotak Mahindra, that's the one which is at the high point of trade. But speaking about a lot of stocks which are buzzing around, we have Stanley Lifestyles. After a very long time, that stock is up around 11%. Decent volumes picking up as well on that counter. The stock priced at around 324. Remember, the IPO that came by sometime in June, was priced at 369. The overall subscription was almost 100 times. You saw a big move all the way up to 600 plus rupees. And from there, the stock nearly halved. And in the last, couple of trading sessions, we are seeing this stock see some signs of life. Prakash, do you track this space? Because, luxury furniture growing faster than all others, the thesis of unorganized turning into organized, all of that did very well. When the market was doing extremely well, the stock went all the way up to 600. Now the stock is back below, way below IPO price. The thesis, is this still intact, or those were narratives of the bull market itself?
Now, Manglam, you probably know this space very well, but I can only tell you that even at the level at which the company IPO'd, that was fairly expensive. You know, what happens is the order book size or the TAM is so lucratively, attractively positioned that you tend to get carried away. But execution is always a challenge. And remember, this is a hyper competitive segment. Just because Stanley is one of the few listed names here, you've seen what happened to some of the other ones which came in yesteryears. They could actually grow. Just because they were listed doesn't mean that they are far better than the unorganized players. But there's a lot of competition. Where these people benefit is that a lot of the spend on furnishing and doing interiors in new real estate acquisition assets that people acquire is getting to get more professionalized. So from that perspective, it's much easier for them to kind of get into. But the space has seen a lot of mortality as well. You saw the likes of Pepperfry and all come and really struggle. So it's not going to be easy. But my sense is it's exuberance because the stock was available at a lower rate.
All right, Prakash, thanks a lot for that. We'll ask you to hold on for just a bit. We'll get some comments coming in from the new SEBI chair, Tuhin Kanta Pandey. We have in his first public address as the new SEBI chairperson, he delivered the keynote speech at the Money Control Global Wealth Summit. He highlighted that bold reforms did not need to be big bang, and the SEBI would have used even small reforms to achieve their objectives. Spoke about transparency and ensured that the SEBI will work to build trust even within the organization. Let's hear him out.
Old reforms need not be big bang. Many a time, small reforms cumulatively are more effective. Going forward, SEBI will use a right mix to achieve the objective. Over the last 10 years, Indian companies have raised, on an average, 2.2 trillion rupees per year through equity issuance in the securities market. As we intend to grow in the speed that we are aspiring, we need to have both domestic and foreign capital to support the growth momentum. With strong economic fundamentals and favorable demographics, India is a bright spot for long-term investments. The country has attracted global investments across equities, debt, and private equity spaces over the years. The presence of such long-term foreign capital would further support infrastructure growth, innovation, and entrepreneurship in India. We at SEBI are conscious about the need to create conducive environment to attract foreign capital. We will be happy to engage with FPI and AIF industry participants to address their difficulties. Maintaining trust and transparency in the financial ecosystem is paramount. A well-regulated market instills confidence among investors, ensuring fair and efficient capital allocation. And I think the trust and transparency extends to SEBI itself. We need to not only create trust of all stakeholders in us, but we also need to maintain that trust. And to that extent, I think we need to be more transparent, including on various other measures, including, for example, on the conflict of interest of the board and so on. And we will be coming forward with our own plan to further transparently, reveal these conflict of interest, etc., to the public.
Okay, all right, some positive comments coming there. I think the markets as well quite enthused by the commentary they got in from the new SEBI chair. Prakash, let's talk about a couple of stocks though that are under some pressure today. On the Nifty, the top three losers are IndusInd Bank. I recall that valuation argument, but that's not playing out, right? The stock is still down to close to 3.5% after being a relative underperformer. NTPC is down 2.5%, and Shriram Finance that actually was doing quite well when the markets were brittle. That as well is down 2%. Do you like any of them? NTPC, Shriram, or IndusInd Bank?
So, Nigel, I think what the market is, the behavior of the market today is telling you that the market is very keen on latching onto pockets of value wherever, there has been underperformance, or stocks have been probably sideways after losing 20-30%. That's where money is kind of going, so it's much more rotational. If you look within the banks, while IndusInd probably seems to be struggling, and there are reasons for that. We've seen there's been lots of issues with its some parts of its portfolio, the MFI side and the unsecured loans. But look at what Kotak is doing. I think where Kotak is today, it tells you that there are these good performing banks which will get rewarded disproportionately once money flow starts coming into the right pockets. The same way, if you look at NTPC, while the other power names are doing far better, NTPC probably because of its huge work in progress, CWIP that's there on its books, is likely to get impacted if there's a slowdown in the renewable portfolio. So, there are reasons for any half a reason, and the market is willing to get out of those counters and move into something. As I said, look at how Reliance is shaping up. Look at some of the other names which have started participating. Even with weaker numbers, the Hero MotoCorp made a comeback. So I think the market's seeking value at this point in time without really losing sight of the fact that things could still be available cheaply, and there could still be some drawdowns in the market. It's not yet over. As some of us could probably start believing. But my sense is there will be this very active churn on a daily basis that you'll see new pockets come into the forefront of wherever liquidity is going. But out of these names, Shriram or NTPC or of course IndusInd, I really don't have a positive view.
And the big binary event for IndusInd Bank will also be, the RBI's nod for the renewal of the leader Sumant Katpalia's tenure, which ends sometime towards the end of this month itself. Remember, the board has approved in September his, appointment as the MD from March 2025 to March 2028, a 3-year extension. That's the board which has given, its nod. But the RBI's nod is something which is still pending. So over the next couple of weeks, this is a development on IndusInd Bank that we will track very closely. It has been the top Nifty loser this week, among the top Nifty losers this week, down about 5% as we speak. But the top Nifty gainer, at least in terms of the points contributed to the index, has been Reliance over the last couple of trading sessions. Single-handedly done extremely well. In fact, right now the Nifty is up about 60 points. You pull up the contribution chart, you would see that Reliance's contribution is a lot more than that. Had it not been for the IT index or the Nifty Bank, which has been dragging the frontline index, you would see that the Nifty could perhaps have hit a century also, because Reliance's single-handed contribution to the Nifty is close to around 70 odd points. The last couple of trading sessions been very good for Reliance. The stock up around 4.5% this week, after being down about 15% in the last 12 months or so itself. Couple of brokerage notes coming by. We have Sudarshan joining in. Yesterday there were two. Sudarshan, right now it's Macquarie which likes Reliance.
What a move we have seen in Reliance, that too for the biggest weighted stock in Nifty. It's up almost 4% today, and that has come after 3% up move that we have seen yesterday. Now it's on the back of 3 positive brokerage notes that we have seen in last 2 sessions. Yesterday we saw that Kotak Institutional Equities had updated the stock to buy, and its target price was 1400 per share. Jefferies too had maintained buy call, and for Jefferies target price was 1600. And today Macquarie has come out with a note. It too has updated the stock to outperform, and for Macquarie target price is 1500, seeing an upside of almost 20% from current levels. What does it say? It says that it has updated the stock because it expects few positive incrementals over the next 6 to 12 months. And for FY25 to 27, it expects an EPS CAGR in the range of 15 to 16%, and that's against mere 2% EPS CAGR that we have seen over FY23-24. Now, what would be the key catalysts? As per Macquarie, 3 major catalysts today. First, better earnings momentum. Second, if company in its upcoming AGM that we have next this year, later in 2025, if company announces anything about geo listing, that would aid the momentum. And last is if there is gradual commissioning of new energy capacity. On the back of this, you are seeing this big up move in Reliance Industries.
Right, Sudarshan, thanks a lot for that. This big up move that is taking place in Reliance Industries itself. So that brings us back to Prakash. Prakash, Reliance been a bit of an underperformer, down about 22% from the highs. Typically, when it starts to move, it does not stop for a while. We've seen that in the past, where there are periods of underperformance, there is periods of consolidation, and thereafter there's valuation which moderates, or more importantly, the company finds new areas of growth to add value to shareholders. Have you seen that take place in Reliance already? And do you think the recent move that we've seen is a start of something similar that we've seen in the past, or maybe you'll wait by for some more triggers?
Well, absolutely. It doesn't make sense to wait for this one, Manglam. We've been anticipating some sort of a change of heart as far as allocations are being made to this particular behemoth. And as you rightly said, it's got so many cylinders that it could fire on. You probably got the retail IPO in the making, which very clearly retail has been doing so well. The Jio IPO, the telecom IPO could also start adding a lot of anticipation. But more importantly, what's going to change for the company is the energy vertical. The new energy vertical will start actually piloting into a lot of the commercial side of the business, which we've been waiting for a long time. And as we draw closer to the AGM, there could be some very significant announcements and developments that could get shared. So, the reason why Reliance takes a hit when things go bad is the ETF flows, outflows that you have in the market. So it's not a call on Reliance particularly, but if ETF money were to go out, it will end up impacting Reliance for sure. So, and that's what's happened. But the fundamentals definitely make sure that it bounces back. And I think this is going to be start of a slow, gradual up move that could probably see it go to that 1,500, 1,600 zones in probably by the end of the year. But there's nothing very sharp in terms of moves that you should expect as a trader. But from a long-term fundamental perspective, definitely it has lots going for itself.
All right, Prakash, we'll take your leave on that and allow you to have a good weekend. Hopefully, when we speak to you on Monday, we will be on the winning side. I see you wearing a blue shirt. We're wearing our blue jerseys, cheering for Team India. For now, it is the markets which are doing well. But on the other side of this weekend, we will have, hopefully, a Champions Trophy Cup on our table here itself. Virtually, but really in the BCCI office. But let's tell you about some numbers. Numbers tell a story, but action drives change. The gender gap index reveals where we stand, and the Future Female Forward Charter charts the way forward. Don't miss this landmark moment in the conversation on advancing gender parity and closing the gender gap. You can watch it live on CNBC TV18, 10th March, 5:30 p.m. Stay tuned.
Welcome back. A couple of these big losers actually, they are bouncing back. So we spoke about Zee earlier today, where we had the promoter entity coming in there and putting some money, 28 crores or thereabouts. It's enough to excite the street. The stock is now up close to around 6.5%. HCC as well has seen a sharp pullback from the recent peak. That stock's at the day's high. Reliance Infra has been all over the place on rather large volumes. A fair bit of traction is what we're seeing in the broader markets. Even Nalco, that's another stock that saw a sharp correction from 250. It went down to around 180 rupees. That stock as well is currently up. For this week itself, it's up close to around 10%. Ajay Vora, Head of Equities at Nuvama Asset Management, joins us on the show. Hi, Ajay. Good afternoon. Good to see you win. You've got a tinge of blue as well, so we're all on the same side and all set for Sunday. But before Sunday, we need to get through the last 30 minutes of trade today. How are you feeling about the markets? We have discussed this in the past, that Nifty is relatively cheaper now. You have the dollar index that's cooled off as well, and crude oil prices staying at very, very good levels is a positive for the Indian markets. So what do you think? How constructive are you on the markets right now?
Yeah, hi Nigel, and good afternoon, and thanks for having me on the show. So I think that we are pretty much excited at this point of time after seeing 5 months of almost negative returns for the benchmark index. And I think if we go back in October 24, since when this whole correction had started, you'll see that, at that point of time, two major factors played out for this whole drawdown for the markets. One was obviously our local slowdown and earnings downgrade, which had started in October, and it lasted almost, I would say, for 6 months. And we are down 10-12% in terms of earnings. And at the same time, there was a lot of optimism in US, right? And therefore, dollar had appreciated by almost, I would say, 10% over a period of 3 to 4 months. And historically, we have seen that, whenever DXY index appreciates, it results in sharp correction in emerging markets. And that is what played out for India as well. But now at this point of time, I think that, considering DXY has also reversed from the levels of 110, 111, considering now there is a lot of uncertainty in US, considering the, I would say, tariff announcements. My sense is that, our bottom is very much in place for us. And I think over next 3 to 4 months, we can see a very sharp rally for our markets. Our domestic, factors will also play out big time in terms of what the regulators have been doing. Almost $40-50 billion of liquidity has been injected. And I think even the budget was pretty positive in terms of consumption. So I think everything put together, we have seen the worst, at least in the medium term. And I think we are due for a very sharp rally.
All right. So you are in the camp that the worst is behind us right now from all perspectives. And, from here on, we will see a sharp rally. Just a two-part question. In terms of earnings, what are your expectations over the next couple of quarters? What kind of earnings growth can we see from, the weakness that we've seen over the last 2 quarters itself? And where does the Nifty go to from current levels? I mean, do you have a target here when you say sharp rally? Do we go back to test the previous highs?
So, Mangalam, I think that the way we should see earnings over next few quarters is that, March is anyways not likely to be that great. But from June quarter onwards, we will definitely see a decent uptick led by 2 major sectors, I would think. One is banking, considering, as I said, the liquidity has been infused and also a lot of pockets on the corporate credit have started picking up. So both put together, I think, banking can be one sector which will deliver above expectation numbers from June quarter. And secondly, if you recollect, last entire year, a large part of the downgrades was led by commodity sector. My sense is that, steel prices have moved higher, even aluminum. So the entire base metal pack and the ferrous, has seen a decent uptick. So that will again lead to some sort of earnings upgrade. So over next, I would say 3 quarters or so, and maybe for the entire year of FY26, we are building in anywhere between 10 to 12% earnings growth. So earlier, if you recollect, the expectation was closer to 1,300 rupees EPS for FY26. My sense is that that number will be closer to 1,200 now. And based on 1,200, I think that even if you give a fair multiple of 20 times, once we are back to that double-digit growth, we should be anywhere around 23,500, 24,000 over next, I would say, 6 months or so, because markets are forward-looking. And then once we start looking at FY27, that number is looking more like 1350, 1400. So I think the stage is set for back to double-digit earnings growth, and that is how the compounding will take place over next 18 to 24 months.
5 to 6% rally once on the Nifty is likely from current levels as well. 23.5, 24,000 implies anywhere between 5 to 8%. Is that your estimate?
Yeah, so over next 6 months, but I'm saying as a long-term investor, once you start looking at FY27, maybe 6 months down the line, we are looking at around 27, 28,000 over next 12 to 18 months.
Ajay, in the last few days, suddenly there was talk of that grizzly bear returning. I don't think you're in that camp. You're sounding quite optimistic on, the earnings from here on. And that's an important point as well that you briefly touched upon, that Q4 numbers may not be that great, but the commentary will be good because these positive measures by the Government of India, by the RBI will gradually start showing up from Q1 of the next fiscal year. And that will be on a lower base. So earnings growth will start coming back from the next quarter. Got that, Ajay. And, my colleague Mangalam in the studio is quite excited about the game. Mangalam, United Breweries, sad one, but it's at the high point of the day. Just take a look at that stock. Zooming away as we speak. The stock was in the red when we started off the show. That's moved to the high point of the day.
I believe that you will be the top contributor to volume growth this weekend and among a lot of other people as well.
I have 45 days, Mangalam, that, I'm off that, so I'll be in the other camp, the green tea and all that.
All right, so the green tea camp. But, as we speak about this, you just keep an eye on United Spirits as well. It's currently in the red, but next week you have the 10th round of talks which will take place between India and UK. If there is a free trade agreement and if there is some conclusion reached out there, maybe the duties on imported scotch are reduced, that would be positive for the likes of United Spirits companies, which actually import a lot of scotch as raw material itself. But one of the sectors which is actually doing very well all through this week, we saw some risk-on return in high beta names, which had actually seen a big move earlier. It was likes of defense and the PSU names, etc. Defense stocks actually buzzing once again today. And Upasna joins in to tell us why. Upasna, after this big decline that we've seen, people are finding some value here?
Certainly, Mangalam. Now, defense sector remained in focus today. It is after the sharp correction that we've seen in the prices. Now, Phillip Capital says that the correction have made these stocks very attractive in terms of valuations backed by strong in-house development capabilities. Now on Bharat Electronics, it has given a buy rating with a target price of 390 per share, which is an upside as high as 41% from the current market price. Mind you that the company is a market leader with 71,200 crore of order backlog and a strong revenue visibility. Now, company has updated that it expects order wins of nearly about 12,000 crore by 31st of March. Now, stock is currently trading at 27 times FY27 EPS and currently valued at 51 times. That is on the back of the robust order book that the company has. Now, coming to HAL, the brokerage has given a buy rating on this stock with a target price of 5,550, which is an upside of 60%. Now, the uncertainty regarding the GEF 404 engine supply is over, is what the company has indicated in Aero India 2025. And now the company expects these engines to deliver in March and April 2025. So certainly a good news for the stock. The stock is trading at 25 times FY27 EPS, currently valued at 26.6 times. Now coming to Bharat Dynamics, brokerage is given buy rating on this with the target price of 1,400 per share. It says that the supply chain issues are resolved and company is on track to achieve 3,000 crore revenue in FY25. The stock is currently trading at 39 times FY27 EPS, currently valued at 68 times. Now coming to data patterns, it is a stock that remained in focus today. Also, we saw a very strong up move in the stock today. The Phillip Capital has given a buy rating on the stock with a target price of as high as 3,400 per share, which is nearly more than double the current market price. It says that it is a vertically integrated defense electronics player with a strong radar portfolio. The stock is currently trading at 22 times FY27 EPS, valued currently at 50 times due to the robust order pipeline. Now coming to solar industries, even this stock has remained in focus in the past few days because of its order wins. Phillip Capital has given a buy rating with a target price of 12,000 per share, and the Company is valued at 46 times FY27 EPS. And lastly, coming to Zen Technologies, the company has signed a MOU with TXT Group, which is making the stock attractive. Now, overall, all in all, just summing up in the defense space, the valuations stand attractive, strong order book pipeline, which provides a compelling defense opportunity for the buyers, is what the brokerage has indicated.
Thanks a lot for that, Upasana. Neat wrap of all those stocks that are buzzing around. Ajay, how are you feeling about these defense stocks? They went on the offense, then they cooled off. And boy, oh boy, people were, they used to join in the channels and say that if the stocks cool off a little bit, they didn't cool off. Some of them became half. What's your take, on these defense stocks?
So I think, Nigel, see, defense is definitely a very strong structural story for next, I would say, 5 to 7 years. And at some point of time, they were definitely very expensive. I would say that there are pockets which has become reasonable now. And therefore, one should definitely look at it for a long-term investor. It clearly makes sense to enter in at anywhere between, I would say, 20 to 25 PE with a decent, sustainable growth over next 3 to 5 years. So I think it is one theme which investors should definitely participate for next 3 to 5 years.
All right, Ajay, thank you so much for joining in. The key takeaways for us, double-digit earnings growth not too far away. And at the same time, we can't rule out the Nifty moving all the way up to 23.5 to 24,000 in the next 6 months. So, but over the longer period of time, towards the 8 to 9 month mark, maybe a rally towards 27,000 not ruled out as well. So that's about market right now. What we'll do is take a short break. On the other side, as always, we'll get checking on what dealing rooms are saying in D Street Chatter, and also get you the tomorrow trade.
Welcome back. More or less a flattish session. The Nifty has now given up some of those gains. We're up close to around 15 points. The breadth of the market is still favorable, though. Two stocks in the green for one stock that's declining. And we are coming to you live from the CNBC-TV18 Motilal Oswal newsroom as well. But Nimesh is joining in from the newsroom to tell us what is he picking up in D-Street chatter. Nimesh, tell us.
Hi, Nigel. Not a bad outcome given the global volatility for Indian equities, at least for this week, right? The Nifty, the mid-cap, small-cap, all have seen a decent pullback from the extremely oversold and low levels. So a decent week, I would say. Today is a day of consolidation, maybe a bit of a Friday factor as well. The flow seems to be quite mixed from the larger FIs, and there is a very small MOC sell basket as well. So some stocks may get impacted in the last 30 minutes of trade. That's from a flow perspective. Having said that, as I said, decent recovery. The small-cap index has rallied to almost 6%. And you've seen a bit of buying interest back and some bit of momentum back in the broader market stocks as well. So that, in that sense, the portfolio investors may be feeling a bit of relief, kind of pullback we've seen this week across the board. In terms of sectors, for today, a couple of sectors are under pressure. Largely is IT under pressure on the back of what happened in the Nasdaq overnight and some bit of profit bookings in the real estate names as well. Real estate is generally a high beta, so it moves with directional trades. But clearly, these are the two sectors where some bit of they are under pressure. But largely, this was a week for a bit of relief rally in the broader market names. A lot of individual stocks have also, pulled back very sharply from the recent lows.
What are you gathering on the individual stocks then, Nimesh? Give us some tidbits.
Well, so in terms of individual stocks, the first stock on my list is Hitachi Energy. That stock also has done a decent pullback in the last couple of days. A couple of brokerage notes as well, which are quite positive. But now I understand the company is likely to raise funds by QIP very soon. So that's the trigger to watch out in Hitachi Energy. So that's the first name. Second stock is Interglobe Aviation. Again, it's a very positive crude play. So that stock also rallied pretty hard. And again, the flow has been quite mixed with a positive bias. But again, in Interglobe Aviation, the buzz is that expect a large block deal very soon. Remember, the Gunval's lock-in of 5 months has got over, so that block can come very soon. So that's the trigger there. The third name is Wipro. While the entire IT is under pressure today, but in the last couple of days, Wipro stands out in terms of aggressive buying from larger FIs. I understand a leading long-only fund is an active buyer of late, and Wipro stands out in terms of within the IT pack, turning out to be a only stock where there is aggressive buying for the last couple of days. And the last is Nykaa. While there was an initiating report from UBS, they've upgraded the stock. The stock is under pressure, largely on the back of self-flow. So expect high delivery volumes, and there is selling from larger FIs in Nykaa today.
All right, Nimesh, thanks a lot for that, for getting us an insight into dealing room chatter when it comes to the market as well as individual stocks. But you're not the only one who did some chatter around. We also found out, both Nigel and I, sources tell us that you are taking that flight to Dubai to catch the India versus New Zealand in championships game.
No, Nigel, I think you guys are wrong in terms of. And I'm telling you, Mangalam, in terms of chatter, don't try to beat me, because this rumor of me going to Dubai is absolutely wrong.
No, thank you.
And in the past, managements have told us that.
we basically tried to bowl a little full toss and you just knocked it out of the park. But this frame looks a little incomplete, because both Nigel and I are in our India blues. We want you to, wear your India blues when we join in as well.
I am for the ERT. I'm doing that.
So that chatter is proven correct. That he will wear a jersey is correct. But that he will take the flight, we don't know.
It's a no. Don't worry.
See you on Editors Roundtable and maybe on the table later after that as well. All right, thanks a lot for that, Devesh. Well, let's get back to Mitesh. Mitesh, markets more or less flattened out. Breadth of the market is good, so you'll have a couple of trading ideas. Tell us, what's on your radar?
I have a few banks as BTST ideas. The State Bank of India is a BTST with a stop at about 726 and a target of 750. And RBL Bank is the other one. That's a BTST with a stop just below levels of 162 for targets of 167.
Okay, all right. Thanks a lot for that, Mitesh. Well, let's focus on the big recovery that we've seen on PI Industries. Now, one of its biggest customers, that's Kumai, reported its Q1 numbers. Vamakshi joins us to give us a breakdown of those numbers. Well, Vamakshi, in the morning, the street was nervous. What are they going to say? But it seems the street likes those numbers because the stock has seen a 5% recovery from the day's low. Tell us more.
Well, absolutely, Nigel. The street is definitely cheering for that. You know, when we look at the numbers that came in from Kumai, you know, the sales were up nearly 10%. The operating income saw an uptick of nearly 36%. And the net profit for the quarter gone by, that is the first quarter, was up nearly 61%. Largely, these numbers came in much better than what the street was expecting. Resultantly, Kumai's own stock was up nearly 4 to 5% in trade today. And this bodes well for PI Industries. And you rightly explained so, and that is because Kumai is PI Industries' biggest customer, specifically for pyroxasulfane. Keep in mind that Kumai, in addition to that, has also gone ahead and maintained its guidance out here for 2025. The guidance that they had shared earlier, and which they continue ahead as well, is that they're expecting a revenue decline of nearly 1%. Operating income may fall by 8%, and profit may decline by 20%. So this is the guidance that they've given. Whether or not they go ahead and revise it further going forward, given how the company performs, that is something that we'll have to watch out for. But as of now, given the kind of numbers that the company has reported, it bodes well for PI Industries, and resultantly the stock recovered from the day's lowest point.
All right, Vamakshi, can you just repeat that word that you said, pyroxasulfate? What is that? How do you spell it?
That is pyroxasulfone.
No, just kidding.
I got it
Thank you so much.
time.
All right. Thank you for getting us up to speed with both pyroxasulfate as well as what's taking place in PI Industries. Kumai's results aiding that stock moving from the lows to the highs. Sudeep Bandopadhyay from IndiTrade Capital joins in as well. Sudeep, do you have a view on the chemical space?
Well, yes, of course I have. And in fact, I strongly believe that, for a minute, leave aside all this, what's happening on the tariff in US. But beyond that, I think the industry was on the verge of a turnaround. The quarterly numbers, I do expect to start improving from Q4. And from there on, I think things should start looking good for the entire chemicals and specialty chemicals industry. The only joker in the pack is always what's happening on the entire tariff scenario. And this is very, very uncertain. So maybe some of these companies like an Aarti Industries, which is near its all-time low, I mean, not all-time low, but maybe a 52-week low kind of a figure. Similarly, you can look at some of the other companies like even PI Industries. I think these definitely can be bought from a long-term investment point of view. One has to remember that this tariff-related volatility one has to withstand, because it's absolutely unpredictable the way things are going.
Okay, all right. Hi, Sudeep. Good afternoon. Good to see you. And Sudeep, in the last few minutes, I think there is some nervousness on pharma names as well. Dr. Reddy's, Sun Pharma, all of them have moved very, very sharply down, actually. Let's pull up the pharma index. That actually is a relative underperformer in the last few minutes. That should come up for you on the screen. Something you like from this space, pharmaceuticals?
I do, Nigel. In fact, the pharma, my belief under the current entire this tariff scenario is that, go for pharma companies which have a strong domestic business, or go for pharma companies which have a strong US manufacturing base. So, Mankind Pharma fits in the first category, Piramal Pharma fits in the second category. I think these two are the stocks which we have been recommending to clients for some time. But, long term or even medium term, there is absolutely no problem in let's say, in a Lupin or Dr. Reddy's or Sun. Cost of manufacturing something India vis-a-vis US is about 5 times at least. So I don't know how tariffs are going to handle the situation going forward for US drugs. So we'll have to wait and watch, but disruption is definitely going to happen.
Disruption is definitely going to happen. Thank you so much for joining in. So we wish you a happy weekend, and maybe, we catch up once India wins the Champions Trophy game as well. And as we speak, we have some bit of profit taking for the markets, largely flattish, but just before, we wind up for the weekend, we've seen a bit of a decline. But as we do that, remember, while you will be tuning into all your screens on Sunday, you won't lose out on markets as well, because now CNBC-TV18 is available at your fingertips. The all-new CNBC-TV18 app. It's India's business news leader, which is just a click away. All you got to do is download the app on either the Apple Store or the Google Play Store, and that gives you instant access to breaking news, in-depth articles, financial world updates, all of them at your fingertips. So large screen, small screen, mobile screen, every screen, CNBC TV18 is your financial news reader. In fact, if you look at the QR code out here, download that, it'll redirect you to the link that will give you the access to the CNBC TV18 app. Just scan that QR code, get the app, and follow the leader.
sanctuary unlike any other. A mission to protect the voiceless.
माता जी ने मुझे सिखाया था हम जानवर का और अलग-अलग जीव जंतु का सेवा कैसे करें.
A Sevalay shaping the future of wildlife conservation. And the world has taken note. Uncover the extraordinary story behind the world's largest rescue, rehabilitation and conservation center. Watch Prani Mitra, the Vantara story. Tonight, 8 p.m. only on News 18 Network.
Welcome back. We've been talking about gainers for a bit. Let's look at a couple of stocks which are not doing extremely well. Trent is one of them. Trent has been extremely volatile all through this week, actually. You know, after a big correction that we saw, there was some purchases on that stock from lower levels. The stock moved higher. The next day was lower. The following day was higher. And now as we speak, has moved to the low point of trade. All in all this week, a move of just about 3% on the way up. IndusInd Bank continues to struggle, currently at the low point of trade for that one as well. And we did spot the pharma pack, so the pharmaceutical index comes up for you. That one seeing some selling as well. Kalyan Jewellers is the other one. Kalyan Jewellers actually has taken a big knock this week. It's down about 7%. Stock at around 430 rupees. After some stability, after a big fall that we saw from the highs on this stock, you know, it's gone into a fresh round of sell-off. So we'll keep an eye out on developments out here as well. So Kalyan Jewellers currently at the low point of trade. Another stock which is under pressure is Hexaware Technologies after reporting a soft set of fourth quarter numbers. In fact, we caught up with the management of the company who expects margins to improve meaningfully from here on. And they would expect the margins to come over 17% in the current calendar year, that's CY25. But in the medium term, they are targeting that 18.5% sort of range as well. The stock at one point was down by about 8%, now seeing cuts of about 5%. The results for the last quarter weren't particularly good. The street did not like the pace at which the company grew. So let's hear out what the management had to say on the pace of revenue growth and margins.
Margins, you're right, we are going to be improving our margins very meaningfully from here. From a full year perspective, we reported a margin which was in the range of 15.9%. Operating margin EBITDA, we expect that to improve to 17% plus in 25, and it will further improve to 18.5 to 19% over the medium term of 3 to 4 years. Yeah, so it will start reflecting from April to June quarter onwards, so which is Q2 for us. So you'll see that the deals will start ramping up from a Q2 perspective, but the full impact of that will get reflected from Q3 onwards, which is in the second half.
The stock of this week has been Gensol Engineering. Is down about 41% after ICRA and CARE have downgraded the ratings of the company to default. Yesterday we had the management as well quiz them about where they will be raising funds for business from. Management did say that they're looking to raise funds. Promoters are also likely to, infuse some of their funds in the business. But now they've gone ahead and informed exchanges that the board will meet to consider raising of funds via issue of securities on March 13th itself. So that'll be something important that we will track. They'll obviously also be looking at stock split, but that's besides the point. The stock split does not help the company's woes. What helps the company's woes is them raising funds via equity. Though remember, the stock has seen a big knock from 1,000 rupees over the last year to about 325 rupees. The warrants issued to the promoters were at around 870 rupees as well. So the price at which they will issue shares to raise funds via the issue of securities, the people who enter this company and the amount that the company raises for them to actually see the dilution that they will see after the big cut that we've seen would be extremely crucial to track. So March 13th, important day to look at for Gensol. This morning the stock was well bid, but thereafter it saw a fair amount of selling. Right now as well, on the back of this news, it's seen some amelioration, still sitting with losses of about 3% and this week going with cuts of about 41%. An important story to track from a business analysis standpoint. A lot of debt on their books. At the same time, we have downgrades coming in, a huge order book, whether the company cough up that money to actually execute those orders as well. But as we move towards close, some final words, Mitesh. Okay, let's begin to wrap up then. The Nifty marginally flat in what has been a good week for the bulls. So after 3 weeks of losses, the Nifty finally goes home this week with gains. For this week, the Nifty is up about 2%, snapping a 3-week losing streak. So fair to say that the bulls have clawed back. Not good enough yet to say that the bulls are fighting back or roaring back, but we live to see another week for the bulls itself. What did well all through today's trading session, the last couple of trading sessions, it's been Reliance single-handedly powering the Nifty on the way up. So today as well, the stock going higher by about 3%. We also see Nestle, which is up around 1%, BEL about 1.5% as well. Stocks that did not do well, IndusInd Bank, the top Nifty loser this week, down about 6% for the week, down about 4% today. We had NTPC, LTI Mindtree, Shriram Finance and Infosys. IT has actually been an underperformer in today's trading session and an underperformer this week as well. From the broader markets, the index was lower, but we did see a lot of stocks advancing, more stocks advancing than the number of stocks declining. Kalyan Jewellers down about 4.5%, Mahanagar Gas down about 4%. On the way up, some traction for Zee, Titagarh Rail Systems, Alembic Pharma, Apollo Tyres and SRF. On the way down, for the smaller cap names, we did have, Gensol, which we just spoke about, down 40% this week. Brainbeast was lower by about 5% as well. Hexaware, we just heard the management speak about the future plans. Street not very happy with the fourth quarter calendar 2024 results. On the way up, the last tick was fairly strong for PC Jewellers. The stock last tick is up around 9%, and Stanley Lifestyles up around 10% as well. So by and large, a good week for the bulls, up 2% for the Nifty, 6% for the small cap index, 3% for the mid cap index. With that, we wrap up on this week of Closing Bell with the hope that India wins when we come back to you on Monday. But importantly, it's Friday. Don't go anywhere, because after this short break, we'll go up, sit at the editors round table as well, give you a roundup of the week that was.